last couple of years, and last 18 months in particular, has been really interesting for us. Being a technology vendor to the capital markets, we really saw a tremendous demand for content, collaboration software, and technology that allowed people to execute their business from home and a bunch of remote locations. So we were a beneficiary of a pretty dramatic increase in demand for a platform like DealCloud, and we saw our clients adopt the solution at higher paces and quicker rates, and we saw a lot of new firms who didn't have that type of technology infrastructure in place actually buy and implement it, in a work from home environment. So while it's been a challenging time for the world, we've been very busy with our business, and have had an opportunity to accelerate the adoption of this type of technology. It's hard to pick, I think, just one thing that makes us successful, but I would say, it's one, great technology, and two, a really excellent team behind the technology that cares about our clients and wants our clients to drive value from the platform. So we've been spending the better part of the last 2 decades, right, maniacally focused on figuring out software for principal investors, and we think we've figured that out and done a nice job with that with the tech. But I think an 800+ person team around the world that actually supports the technology is really in many ways more impressive, and is what has led to a lot of the success and the reputation. We've had a lot of updates in the last really 12 to 18 months, and I think one of the most important things that we're learning, we go to market as CRM, but the platform and the technology in many ways is a lot more than that, right? It really becomes a central repository and hub where folks do their sourcing and origination work, where they do the deal execution work, where they forecast their business. And we've added a layer on top of the platform it's really an applied AI layer that harnesses the information and gives relationship intelligence to our users. And I'd say that's been one of our biggest areas of investment. We're really proud of it. It came out in general availability really in the last couple quarters, and we're getting some great adoption of that. It takes the data in the tool beyond CRM and beyond pipeline. It allows our clients to look at their relationships and really harvest the strongest ones and spend time with the most profitable relationships that they have. Another area where we've seen a lot of progress is just on the diversification of private capital asset types. So we've spent a lot of time building out specific experience and solutions for real estate investors, for secondary investors, for the limited partner and allocator community that's increasing their commitments to these GPs at a greater and greater rate today. So we spent a lot of time there. We're also working on the advisory side with the investment banking community and the placement agent community, and those services have diversified as well, right? The equity capital markets have been very strong, so we've seen demand there. The M&A business has been excellent, and there was a little bit of dip in fundraising when we went remote, but still the placement agent business and the fundraising business has been quite strong, even through the last year and a half. We're spending a lot of time this year investing in the product. We do 4 releases a year at the end of each quarter, and the objectives for this year it's a long list of initiatives, but to hit some of the high points, we're working hard on the user experience, making sure that the user interface is modern and gives a next generation experience for the user. And then secondarily, we're working hard on the data inputs that go into that platform. So we're expanding our relationships with the third-party data vendors, right, the PitchBooks and S&Ps of the world, and we're feeding that information into technology so that our clients don't have to use the product as much. There's less data entry, right? We can seed the platform with the market data that they're looking at in other systems. So that's a big initiative for us. And I think, really actually growing our team geographically. So we've always had a great presence in the US and in Europe, but we're expanding our Asia Pacific business in a pretty aggressive way this year with a lot of people on the ground there in new offices in that region. So we're excited about that, and a lot of our current customers are actually already operating over there, so it was just a natural progression for us to be there and be on the ground there. We think the outlook for the market is very bright. I mean, if you look at most of the research out there, it says the private capital markets as a whole are growing somewhere between 7 and 10% annually. And we've seen that over the past couple of years, and I think the outlook remains the same. I mean, if you look at the total amount of capital in these asset classes, you take BlackRock, for example, that runs $10 trillion of public equities, just the private equity asset class and the venture asset class alone don't even reach that $10 trillion mark yet. So we think that there's secular bull market trends for capital flowing from the public markets into the private markets on a consistent and kind of constant basis into the foreseeable future. And so we're supporting an industry that really has a secular bull market trend, and as a result, we benefit from that, right? We're selling into and supporting a growing market and a growing environment. So we feel very fortunate to work in this industry and to work for these firms. So we're bullish and very optimistic. I mean, there's a lot of demand for software. There's a lot of demand for infrastructure as these GPs and asset managers get very large, and many of them now are public companies, right? So, we're encouraged.